Hey everyone, welcome back to the channel. Today I want to talk about something that makes most people uncomfortable, and that is debt. Now, most of us grew up hearing this: stay out of debt. Debt is dangerous. Debt will ruin your life. And honestly, for most people, that advice is correct. But here's the uncomfortable truth. The wealthy use debt all the time. Not to buy cars, not to buy lifestyle, but to buy assets. So in this video, I want to break down very simply how the concept of using debt to get rich actually works. And I'm going to share a practical example of how I personally use debt to grow my portfolio. This is not financial advice. This is just me sharing how I think about using other people's money, OPM, strategically. Now let's get something clear. Not all debt is bad. There is bad debt like credit cards, car loans, personal loans for lifestyle upgrades, renovations that don't increase value. This takes money out of your pocket. Then there is what I call strategic debt. This is when you borrow to acquire an asset that generates income, appreciates over time, or both. That's the foundation of using debt to get rich. The simple question is, does this debt put money into my pocket or take money out? If the asset produces more than the cost of the debt, you are potentially using other people's money to grow your wealth. That's the shift. So what is OPM, other people's money? Well, it simply means this. You control an asset without using only your own cash. Banks do this. Corporations do this. Property investors do this. For example, if you have $100,000 and you invest it at 8%, you make $8,000 a year. But if you use $100,000 as capital and borrow another $100,000 to control a $200,000 asset, earning 8%, now that asset earns $16,000. Even after interest, your return on your original capital can be much higher. That's leverage. But, and this is important, leverage magnifies losses too, which is why you must control risk. Now, let me share how I personally apply this. For me, I'm not so into property, I'm more into stocks. So inside my IBKR account, I hold income producing ETFs and positions. Let's say, for example, my portfolio value is around $200,000. Part of it is parked in something stable like S-Golf, short-term treasury ETF, which generates yield. Because IBKR allows margin, I can borrow against my portfolio at relatively low interest rates. So here's how I think about it. If IBKR charges me, say, 6% interest, and I can deploy that borrowed capital into assets yielding 8 to 12%, there is a spread. Now, I'm not maxing out margin. That's dangerous. I keep it controlled. For example, if my account is $200,000, I might only borrow $20,000 to $30,000. That is 10 to 15% leveraged. Very conservative. I then deploy that into income ETFs or opportunities when markets pull back. So what am I doing here? I'm using debt to get rich, but in a measured way. I'm using other people's money to accelerate compounding. But I stress test my portfolio. I ask myself, what happens if markets drop 20%? Can I handle a margin call? Do I have buffer cash? Is my cash flow strong enough? If the answer is no, I don't increase leverage. Simple as that. So why this matters for middle-aged men like us? If you are in your 40s or 50s, this is actually your prime time. You're likely to have stable income, accumulated assets, financial discipline, experience. You're not gambling, you are managing. Using debt to get rich at our age isn't about YOLO trades. It's about controlled leverage, cash flow investing, risk management, strategic scaling. The biggest mistakes is emotional borrowing. The right approach is calculated borrowing. So here are some rules that I follow. If you are considering using margin or debt, here are my personal rules. First, never max out leverage. 2. Always keep emergency liquidity. 3. Only borrow for income-producing assets. 4. Stress test for market downturns. And lastly, sleep well at night. If I cannot sleep, I reduce leverage. Peace of mind is part of wealth. So here's the bottom line. Debt itself is not evil. Irresponsible debt is. Using debt to get rich is about understanding numbers, managing risk, and using other people's money strategically to accelerate wealth building. Think of it as a tool, and tools are powerful when used correctly. Alright, if this topic interests you, I can do a deeper video breaking down exactly how margin works in IBKR, the risk of margin calls, how to calculate safe leverage, how I stress test my portfolio. You just need to let me know in the comments. And if you found this helpful, give this video a thumbs up and subscribe to the channel. Alright, thanks for watching, and I'll see you in the next one.